a lot of people, when they think about maybe leasing a space, renting a space for their business, there's so many people and so many decisions that go into it before you just, I suppose, sign the lease. Talk a little bit about maybe the team environment that you find yourself in, helping people make the right decision for, building their business or expanding it.
Absolutely. Well, thanks for having me on again this morning, Ben. It depends, and that's something that the commercial nobody likes to hear from a business professional when they say it depends. But it truly does depend on your type of business. The revenues your business makes, if it's wholly owned, if it's a sole proprietor, an LLC, or a C Corp. Mostly, from the business owner's perspective, the difference is whose money you're spending. If you're a C Corp, you're spending, other people's money. If you're any of the others, then you're spending your own money. Mm-hmm. And so that has a lot of different variations on the team you'll assemble, how much due diligence you put in there. When you're spending other people's money, sometimes it could go either way, that you are doing all the due diligence necessary. You probably already have a team assembled in-house. But I think what, for most of your listeners out there, we're looking at sole proprietors.
Probably
LLCs.
Spending their own money.
They're spending their own money. So every dollar come out of their pocket for due diligence or rent or operating expenses comes out of HIP National, out of the owner's pocket.
HIP National?
HIP National. That's the bank that we all
must be a commercial real estate thing.
Yes, that's right. But when we're looking at that, and when I'm working with a client anyway, finding out the corporate structure and then saying, with my years of experience, to just kind of figure out how important is this in the grand scheme of things. Mm-hmm. If the company's making $20 million a year and they're going to have a $5,000-$10,000 a month expenditure in leasing, that's not a big blow. But if they're at that level, they've already got their team assembled. Mm-hmm. Sometimes when you have a smaller company and it's a startup, whether it's a franchise, whether it's a auto body shop, whatever, it's probably an individual who's very good at a specific trade or practice, and outside of that realm, they probably don't have a lot of experience.
At minimum, no experience.
At minimum, zero experience. They have a good idea, a concept, a product, mm-hmm. and they want to get it to market. One of the things that I have seen time and time again over the years is that a lot of small business owners, because they're used to having everybody come to them seeking answers, they feel that they need to have every answer that could possibly come up, whether that's a legal question or an accounting question, a real estate question, a long-term business strategy question. Excuse me. And they just haven't run into it before. Mm-hmm. So that's when, in my opinion, a successful business owner will sit back, maybe chat with his friends, buddies, networks, people in his business community, and get referrals, and then develop himself a team. And he probably already has that in his network or her network somewhere, which is, if you're talking about expanding your business, you're going to need real estate, you're going to need a bigger facility, you're going to need your CPA that they already have or your bookkeeper. Your due diligence you can assemble internally yourself. Go ahead and build that and say, what have we spent? Maybe break it down, cost per employee, cost per square foot, something like that. Come up with a metric. And then when you go out and say, and I already have an attorney, he may not specialize in some specific area like real estate law, leasing contracts, things like that, but a good general business attorney who can give you a referral to a specialist. Mm-hmm. So now the small business owner has a CPA and he's got himself an attorney. That's two really critical members of his team. Between those two, you can find out a third member, which is a specialist you bring in just to help you with a specific task, which is whether it be real estate or acquiring another business, whatever it may be. But when you do that, go ahead and my recommendation is for the owner to assemble that team in one room for a quick 30, 45-minute, hour conversation. And at that point, hopefully the business owner will trust all of those people at the table and be able to say, this is what I want to accomplish. This is what I want to do. Let's all talk about it. And with that, then you start pulling in all the legal advice, the financial advice. You get some current market information.
You essentially end up with an advisory board.
An advisory board for a specific period of time, for a specific project. And granted, CPAs charge by the hour, attorneys charge by the hour.
Expensive meetings.
They can be if you don't optimize it.
Yeah.
But then again, brokers, commercial real estate people don't charge by the hour.
Those are not good for the entrepreneurs who like to hear themselves talk. That can be a very expensive speech to give.
Yeah. Well, there's no sense in calling a bunch of people and paid by the hour to talk to them.
Right.
It's usually you're supposed to pay the speaker. Why don't we do that here? I'm sorry. I'm sorry. Yeah. Kidding. But what happens is then the business owner needs to just turn around and say, help me get from point A to point B. Mm-hmm. At that point, if you can keep the meeting to an hour so everybody leaves with the objectives, time frame, costs, and that should get the business owner started.
Now, when you talk about point A to point B, oftentimes that would be a growth, some type of growth inside of a business. And, coming from the commercial real estate side, I would imagine that people may ask, is this going to be kind of like profitable space? Or is this going to be space that I am is burning a hole in my pocket?
Absolutely.
And I would think that, you may have like your sales force and you may have maybe your tech support or your in front of the house, back of the house. And there must be a very interesting way to gauge which pieces of the real estate are profitable.
Absolutely.
And how big do you want your entryway?
Absolutely. And when you're doing that due diligence and analysis, you figure out what your customer base is. Do the customers come to the office? Do you have team meetings? Do you have inventory? Do you have paper needs? Are your employees technically based, which is they do everything on a desktop or a laptop and a phone, or is an engineering firm where they have to roll out plans, keep hard copies? All those different space requirements require a different set of due diligence needs and evaluations before you go out and start looking at space. For office space, they have all sorts of different metrics depending on the type of office space, whether it's 150 square foot per employee or 250 square foot per employee. If you're running a garage, you say, I'm not profitable if I can only get 2 cars in the bay. That's not going to keep us profitable. So, and of course, inventory and everything like that. So, that's part of the initial phase, especially if you're starting a business, for you to have those numbers, hammered out, at least projected, estimated, so that when you sit down, you say, this is what I envision I need, with the caveat of, I'm not really sure.
Right. Well, I mean, Matt, we're here with Matt Royal, president with Royal Commercial Corp. When you start looking at, you mentioned a car repair shop. The inventory probably isn't super profitable to hold it there, but you may lose a customer if you don't have the right parts.
Correct.
So that must be a very difficult thing for people to manage.
It is, but usually if you look at different spaces, when even just regular folks when you're driving around, you see in a car shop, automobile repair shop, for example, there's a lot of vertical storage. They use every section of the wall. Mm-hmm. There's either belts or hoses or whatever, and tall, skinny stack storages that go up. So utilizing their space, what your inventory is, how heavy, that's something that you just have to.
And that's going to change from business to business.
Oh, absolutely.
You look at a real estate office, you mentioned 125 square feet a person. You look at maybe a real estate office, it's probably like 30 square feet, or 60 or something like that, because they get they're in a booth, their cube or whatnot, and they're on the phone.
But see that when you say no, my employees only take up 30 square feet. Well, okay, then let's look at the common area. Let's look at the lobby, the reception, conference facilities, kitchenette, all those little corridors, alleyways.
They all count.
They all count. So that starts adding up. So it depends if you do in-house training, you do quarterly employee meetings. And can you actually outsource that to the Hyatt or to someplace else for an all-hands meeting once a quarter, for 30 people, whatever. Yeah, you can work around that in any scenario.
Sure. So when you talk about you find the right space, there must be pretty vast different costs. And how does somebody determine? I've heard Class A, Class B, industrial. You get all these different types of office space or workspace. How does somebody determine what's going to be best for their business and getting them from that point A to point B and making sure that it does remain profitable?
Yes, that obviously we can be the play to the theater of the absurd here, which is you're not going to put auto body shop in a Class A space, one, they wouldn't permit and allow it. But people who kind of have service industries, or it depends on if you're B2B, business to business or business to consumer, you kind of already have an idea as to what type of building you need. It also depends on whether you're going to have clients visiting you, if they're Fortune 100, 500 companies, or if you have some investors that want you to, have a good image, or if they want you to be very good stewards of their investment funds. Then that's what you get when you talk with a real estate professional, which is, what's our goal here? Our goal is to put as many people in
make
a space.
a really pretty facade, or
there's those are out there,
right?
That looks really good when you walk in, but they don't have a nickel in the bank. But hopefully they'll get some investors. But long story short, if there is a space out there, you need to have a real estate professional come out and help you find that. So you kind of have to take the broker under your wing and say, hey, these are our revenues. This is what we've allocated on a percentage basis for our space. And we, every square foot of space that we don't use comes out of our overhead, comes out of our, hiring base, comes out of all of that. And so and it's a long-term obligation. So when you take a look at that, you say, well, I'm going to sign a 3-year, 5-year agreement. That doesn't change. If you go on a hard quarter, you can, it's not preferable, lay people off or cut some costs or cut back on your marketing. Once you sign the real estate contract,
Is that typically how long they are, 3 to 5 years?
Depends on the square footage that you look at. I'm a big advocate for startup businesses for doing subleases, because you get to come in to a Class A or B office building at 50% of market value, and you get a deal for a short period of time.
And you see what happens.
Most people who are starting a business, they don't have much office experience in how to run one. They don't realize all of the costs that start to creep into there, and it can be spendy.
Yeah. And we'll save that for another time. But I would imagine between phones and computers and internet and
parking, and depending on where you're at, sometimes, if you get in $280 per month per employee to park, and you look at that and say, well, we're not paying for that. Well, now you're going to ask your employees to pay for that. And when you go to hire new employees, they may not want to pay $280 a month to park their car.